Okay, we are going to talk about moving averages. So, as you know, the marketplace is very noisy and it is often more volatile. They 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 don't go in a straight uptrend or they don't go in a straight down. They are highly volatile. So we must need some tools to manage this highly volatile market or price. So that's why you are using a moving average. So the in case if the stock is uptrending, we may see a down days. Even if there is a downtrend, we may see a up days. So this is lot of noise and complexity and volatile in this market. That's lead to this. So what do the moving average do? The moving average calculates the average price. If there are 10 prices, it gives us the average over the period of time. Time is nothing but the candle, every minute of a candle. If you choose in the 5 minutes time frame, each candle is a 5 minutes. If it gives us the average of that given time frame. Moving, for example, let's say the moving average is calculated of 10 days is calculated by the closing price of the every day candle from previous 10 days. I hope you get it. A moving average of 10 days, 10 MA will be calculated by average value of closing price of the 10 previous candles. So while days are progressing, if we hit the 11th day, we are going to remove the first day that we added, and we are going to add latest recent closing price to the moving EMA. So you might note as that the moving average is calculated by the closing price. It is a lagging indicator because it is slower than the market. So here is a very important point that I like to share to you. The important to know that sudden rise or fall in the price. If the stock price suddenly rises and it moves away from the MA, the stock will return back to the MA line, because the line is a parallel line or a magnetic line. The price and the MA line needs to be in a parallel way, so that they are like a both magnet. Which always the price should come back to the MA line. If there is a sudden rise or fall in the price, you need to be alert and wait for the stock to come back to the MA line to give a entry or an exit in your situations. So how do you confirm that the stock is an uptrend? With moving average. Moving average, the line will be in upward curve. And first point, and when you know that the moving average is upward, you can know that there is a buying pressure and the stocks will keep rising. This indicate an uptrend. In always in the uptrend, the price will be above the moving average. This is the very important point. The price, if there is a uptrend, the price will remain above the MA line. The MA line will act as a support. It will catch the prices without falling down, so that the MA line will act as a support during the uptrend. So how do you define if it's a downtrend? MA line will slope downwards, that confirm that price is falling and will fall further. The Here the price will stay below the MA line. Here the MA line will act as a resistance. In the strong downtrend, the price will not go above the MA line because it is acting as a resistance. So it is better to keep stop loss near and the entry position near MA lines. So what happens if the stock is in sideways? So in sideways, what happened is that if we have two moving averages, they will crisscrossing, that price will keep crossing this MA line, or multiple moving average will keep crossing this MA line. This denotes that the stock is in sideways. It is also known as range bound market. We will see how can we deal with this type of market in a future videos.